number 4 with your Go Live educator right here, Manny Quinones. We're so blessed, grateful, and excited to have everybody here with us today. Feel free to let us know where you're tuning in from right there in that chat box. And if you ate on yesterday's trade, we're going to make this quick and brief so we can get right into the training for those that are watching this recording. But yesterday we made a big announcement that we are going to be officially changing our Go Live time to 10 a.m. Eastern Standard Time starting next week. So if you are watching this live or if you're watching this on a pre-recorded, please remember that starting next week and every day after that, the classes will be at 10 a.m. Eastern Standard Time. For those of you that stood with me through the update, even though we have been training through the Go Live, I gave you guys a bonus trade yesterday, broke down this Euro odd trade. We got right into the Euro odd trade with absolutely no drawdown. We set the TP for about 75 pips, which we hit, and the trade is up roughly 100 pips depending on your entry. So I hope you guys made some absolutely amazing profits on that, stacked your orders, and did what you have to do. Now, with that being said, let's continue our I Am Mastery Academy Bootcamp. Alrighty. So as you guys know, you guys should have already watched course 1, 2, and 3. Remember, you can access the course right on my Go Live. So under the video that you're watching now, you click favorites, and those videos are there. Or if you want the Go Live recordings more organized, you guys can feel free to come to my website, educatormannyq.com, where you can have a direct link to my Go Live channel to always access myself, my new member training, or you guys can click on Go Live right over here where you can access our pre-recordings. Now, all of the I Am Mastery Academy bootcamps are going to be here. So course 1 was buy versus sell, what are pips, how to calculate lot sizes, pending orders, and spreads. Video 2 with the 3 type of analysis, helping traders understand the 3 type of analysis that you will encounter on a day-to-day basis, such as technical analysis, sentimental analysis, and fundamental analysis. And our previous course was all about the cycle of doom, stop loss rules, risk to reward ratios, and risk management. Basically teaching you guys how to trade the proper percentage of your account. So in the event of a bad trade, you don't blow your account and lose all your money, and also how to have proper risk to reward when setting up trades so you can lose just as much as you're winning or lose more than you're winning, but always make more money, right? So some of the tricks to the trades to becoming a professional trader and investor. So please make sure that you guys are watching this. Remember, you can also access all of our advanced classes like market geometry here, corrections and patterns, and then also our strategy classes down here. By clicking on watch this video, it will take you directly to the pre-recording on Go Live. All right, so today we're going to resume our training. And if we take a look, remember, we're going to be breaking down the entire Go Live Academy. So we have now just entered the 200 series, and we're going to be starting on what is a trend today, ladies and gentlemen. Okay, so we're going to be going in depth on what are trends, what are channels, how to plot them, how to interact with them. And it's going to be a rather good and pretty intense course for anybody that has been struggling with trading trends and how to use trends. You know, they say the trend is your friend within the market. And no matter what any trader says, trends are like one of the most pivotal things that you use in terms of reference in the market to help dictate whether you're going to buy or sell or a trend reverse or anything. Trends are extremely important. So it's very important that you know how to master them. Now, with that being said, okay, I have a pre-recorded video that I did for my team privately that is unlisted on YouTube. Unlisted means that nobody can see it without the direct link. And obviously, I'm not going to give out the direct link. But what I am going to do today, because that was such an intense course, I am going to actually air that recording right here for you because I rewatched the recording and I'm telling you, it is absolutely excellent. So guys, I want you to prepare. Make sure you get your teams on here. Anybody who is ever struggling with trends or channels in the market, when to buy, when to sell, breakouts, if they're getting confused between multiple trends, it's all going to become clear today. So if you guys are ready, just drop an 888 for me in that chat box. Let me know that you guys are ready, and then we're going to start rocking and rolling, ladies and gentlemen. What's going on, ladies and gentlemen, and beautiful people? This is Manny Quinones here, continuing our Forex Basic Training Series. And in this video, we're going to be covering trends and channels, or more so how to plot, how to mark up trends and channels in the market so we can become better traders. Now, in our previous two videos, we covered market structure, such as the formation of an uptrend, where the market's creating higher highs and higher lows. And as long as price is continuing this formation, we're in an uptrend. And then how price starts to make lower lows and lower highs. And as long as it continues this formation, price is going in a downtrend. And then the next video after that, we ended up covering how price makes these support and resistance zones that basically help price climb up and down into these new areas until ultimately price meets a turning point where price can no longer break higher, and then the market starts coming down. And then as you see here, we're back to the market just climbing up and down support and resistance, climbing up and down support and resistance zones, right? Making these higher highs and these higher lows. Well, in this video, what we want to be able to teach you guys is the rules of engagement, the contact points that actually start the formation of a trend. So that way you guys can see how to better analyze your trades. Alrighty, so let me get rid of all this here on the chart, remove all drawing tools, and then let's come over here and then actually do some chart work. So I'm going to come back over here. We're going to write a trends and channels. Trends and channels, okay? Okay, all right. Now what we're going to do here is we're going to do a little market exercise. So let's take a look here. As the market is climbing up and it's making these series of higher highs and higher lows, the market is going to be turning around at these support and resistance zones as we spoke about. Okay, so we're going to mark up our highs and our lows, let's say in this particular trend. Okay, just like this. Now, anytime the market is in an uptrending motion, in order for us to properly mark up the charts, we would have to come over here and grab what's known as a trend line. Okay, and if we're ever starting at our base low, we're going to run some live examples. Okay. But whenever we're starting at our base low, we have to learn how to properly mark up the trends and channels. And what we do is we always start from the lowest low, and then we begin to connect the first two lows in the market. We begin to connect the first two lows in the market to support our uptrend. And as long as price is staying above this line, then we are in an uptrend. Okay? So we're going to start dragging this out so we can see what exactly an uptrend looks like. Okay? So now, as you see here, this uptrend also helps us with our buy low, sell high theory, the same as support and resistance. Whereas when we're in an uptrend, anytime price is near the trend, this is considered a low point, right, where we want to buy. So let me come this over here. Consider a low point where we want to buy. So we want to be able to buy at the trend. The trend is our friend, all right? Now let's write down some rules of engagements because we're going to start getting very detailed with trends, trend reversals, counter trends, channels, and then we're going to bring it over to the live market, and we're going to show you exactly how these theories hold up. Alrighty, let's come over here, and we're going to write the rules of engagement. Rules of engagement of a trend. Okay. Now, rule number one is 2 points of contact start our trend. Okay, as we know, just like a support or resistance, we need 2 points to connect to even start a trend. Okay, we have 2 points, it starts a trend, and we can drag out the trend. Okay, now, second rule is third hits of the trend. Third hit of the trend is usually a valid buy or sell. Okay, so the third hits of the trend, meaning this is the beginning. The second point is the start. We contacted these 2 points. And then this third hit right here, that third hit is usually one of the most powerful buys that you can take in the trend. You can expect the trend to react at that third key hit to go up. Alrighty, that's a psychology point we want to keep in our mind. Now, the third point, the third rule of engagement to a trend is that the fourth hits and beyond, we are expecting a break of the trend. Okay? We are expecting a break of the trend. What do I mean here? I mean that when the market comes back down to the trend line, this fourth time This fourth time, when the market comes back to the trend line, this fourth time, this is usually the area where we're expecting the trend to start breaking, okay? We'll end up seeing some nonsense where it plays around the trend, but ultimately, this is going to be the area where we're looking for the trend to break out and for the market to start turning over, okay? Now, let's talk about this. We're going to turn it over, but anytime that we are trading with the trend, whenever we're trading with the trend, okay, that is known as trend trading, okay? TR, give me 1 second, is known as, pardon me, is known as trend trading, all right? And uptrend acts like a support. It's basically another form of support, okay? So anytime we're at the low of the trend and the market's in an uptrend, this uptrend is acting as a support, all right? Now, trends can also become channels because just like how price, let's come over here, just like how price gives us a support and resistance, okay? Let's mark this up here. Okay, let me mark this up for you guys right here. Okay. So just like how price has a support and resistance, where price can bounce around in between support and resistance, a trend also has a resistance. A trend also has a ceiling. And these are where channels come into place. Because if the market is low, at the low of the trend, at the support of the trend, then where is the trend resistance? This is where a channel comes in. So I'm going to come over here, and then we're going to draw up this thing right here, which is known as parallel channel. I'm going to highlight that. And the parallel channels are very cool tool because they'll let us draw out our trend, but then it'll let us take an extra step where we can begin to form a channel in the market. Okay? We can begin to form a channel in the market. All right? Now let's see this. I'm trying to make this blue, and we can even make it a little lighter. Okay? There we go. So now, if we're gonna buy low, then the top of this channel is where we're basically gonna sell high, okay? This channel up here acts like the resistance to the trend. This is where you can expect the trend to start reversing to come back down to the trend line. Because when the trend line, guys, let's come over here. When the trend starts coming up, it's not gonna come up forever. It's gonna have to react at some point. It's gonna react at a support. But if we have a support, that's over here in the market, and then there's also the top of the channel, then this will give us a good confirmation to start saying, okay, the market can potentially react here and come back down to our channel line. Alrighty? So we buy low if the market is becoming in an uptrend, and we sell high at the channel resistance. Now, anytime that we're, let's say, at the high of the channel, and we want to sell back down to the trend, okay? So let's say we're at the high of the channel and we want to sell back down to the trend, okay? This is known as counter trend trading, all righty? This is known as counter trend trading in the market. So when we're buying with the uptrend, that's trend trading. When we're buying against the trend, this is known as counter trend trading. Now, it's very important for you guys to understand. Here's a tip. Counter trend trading is more high risk because you're trading against the trend. So if you're not counter trend trading correctly, there is a larger risk in the market for you to be wrong and then the market keep going up. Alrighty? And we're going to start running through some live examples. But let's talk about how we mark up a channel, okay? Channel. So as you know, as the market is making higher highs and higher lows coming up, okay, this very first peak in the mountain, okay, this very first peak on the trend, meaning if the trend started at the base and it made its first high, it made its first peak and then came back down to the trend, okay, and gave us those 2 points of contact, and then this is where the trend started. We take these 2 low points to start the trend, and then we drag the channel right up there to the peak. Okay, we drag the channel up there to the peak. Let me show you. Okay. Boom, we're starting here at the low, and then we come up to the first peak in the market. And that's our channel. Now, the only thing we do, just like the trend line, we just continue to stretch that out. Okay? I'm going to show you guys here as we start marking up the chart with our support and resistance zones. Let me draw this up clearly for you guys. Okay, nice and clear. There we go. Let's make this red because that's a counter trend. And then I'll put this blue since this is the breakout right over here. Okay, or I'll put that black since this is the breakout in the market. Okay, so now as you see, when the channel's coming in and when price, is coming in an uptrend and it's bouncing around at the support and resistance zones, okay, the channel can also be in these areas. Now let's take a look when the market starts counter trending or when the market starts reversing. Look what happens. The market breaks out of the uptrend, usually around the fourth hit. They'll find some type of resistance. They'll find, they'll find some type of support, right? We covered that in the last video. And then the market will come back up to a high point. And then the market will start coming back down to the next support. And then this previous support becomes resistance, right? We talked about this. And then the market keeps coming down. So we end up taking the parallel channel or the trend. Let's come over here and draw a channel. We end up connecting these two points where the market starts to make those lower lows, those lower highs, where the market broke out, and we come right here to that low. Okay, we take that first V, that first valley in the market. It's the same thing as an uptrend. We're just doing it as a downtrend now. Okay, we take that first valley, and then this makes our down channel, and then we simply bring this out. And then this would help us create more points of support and resistance where price can start reacting at when it's coming in a downtrend. Okay, so these are trends and channels inside the market, ladies and gentlemen. Okay, now what I'm going to do is let's come over to some live charts and then let's start seeing if these rules of contact actually hold up. Let's see if we can start marking up trends and channels inside the market. Let's see if we can find trend trades and counter trend trades. Because as easy as it sounds like in concept, once you apply it to the live market, it can become more difficult. Alrighty, so let's come over here. Let's take it out on the market. Alrighty, let's come over here and let's take it up in the market. Alrighty, come over here. Let's delete all these drawings. Let's make some fresh trends and channels, just to keep that up on there. Trends and channels. Make this black. Bring that back up to 28. Alrighty, and let's look at the market. Okay. So as we see over here, the market is clearly, pardon me guys, let's go. As we look here, we can clearly see the market's coming down, coming up, coming down, coming up, coming down, coming up. It's just doing all these different trends. So let's start making rules and engagement, okay? I'm gonna come over here where the market looks like it's coming down. I have my first point, I have my second point of contact on my trend, and I'm just gonna drag this out. And let's see what happens over here. 1 point, second point of contact that started the trend, third point of contact, which usually is the best sell or buy, and then the fourth point of contact which is usually the breakout area. Boom, there we go here. So there goes a downtrend. Now let's take a look over here as the market's starting to come up. Look what we have here. We have the first point in the market. We have the second point, or technically the third, depending on how you look at that, in the market. Now what I'm going to do is I'm going to take this and I'm going to start dragging this out all the way over here so we can eventually see what's happening with this. This was a major trend inside of the market. Okay? 1, 2 points, or if you come down there, we have 1, 2 points of contact. Third point, usually the best buy inside the market. Look how the market came up. Fourth point is where you're looking for the breakout, but as you can see on a much larger time frame, this was a very, very big trend. So this continued to hell. This continued to hell. So look at that. 4, 5, 6 points of contact. Major, major, major trend over here. But when you look at the market, ladies and gentlemen, you can see that there's a lot of little uptrends and downtrends in between. These are the trends that we're going to start focusing on to really start trading. Okay, so let's get into it. Alrighty, let me delete all those black lines. Actually, remove all drawing tools. All right, let's bring this back. Trends and channels. All right. let's look at what's happening over here in the market. Okay, boom, downtrend. Then we have this massive uptrend in the market, which I'll get to in a second. Now, in between that, let's take a look at the trends over here. Let's take a look at the trends over here. You see the market has an uptrend here. 1, 2, 3. What do you guys see? Boom. 1 point of contact, 2 point of contact, starting the trend. 3rd point of contact, usually the best buy. 4th point of contact, usually where we're getting the breakout in the market. As you guys see, it's right there. Within here, there's another trend. 1, 2. Let's start drawing this up. Let's get rid of these indicators here so they stop popping up on the charts. Okay? 1, 2, 3 in the market. Take a look at this over here. We ended up getting 1, 2, 3 points of contact. Had a little bounce off in the market right there. Not many pips. Had a little bounce off, 20 pips. 4th point of contact. Market broke through. Okay? Let's take a look at when the market's coming in a downtrend over here. Start at the high. 1, 2, 3 points of contact. Usually the best sell. Let's bring it down to the market. Okay? 1 area, 2 area, 3rd area. Boom. 4th area of contact. Price broke through. Okay? Let's take a look over here. Market is coming back up in this smaller uptrend right over here. 1, 2. Let's look at this big trend that's happening. Okay, look at this big trend that's happening in the market. Let's start just dragging this out to infinity. Why do we want to drag this out to infinity? Because before all of this future data existed, while we were looking in the market here, and you see the market really started coming up over here. Market started forming another trend inside of the market right over here. Started forming another trend inside the market right over here. 1 point of contact, 2 point of contact, 3rd point of contact, usually the best buy. 4th point of contact, market ended up breaking through, right? Are these rules of engagement always going to hold up in every single trend? Absolutely not. But is it a good philosophy to follow to have you just psychologically understand how trends work? Absolutely. It can give you a better broad understanding of buying and selling at certain points of contact. But now look, as the market's coming up, boom. So look, we're going to focus on this for 1 second. We can see here that in this trend, we had 1, 2 points of contact. So eventually, price has the opportunity to return to this trend. So when price does return to this trend, we can expect a trend bounce. When price does return to this trend, we can expect 1, 2, 3. We can expect something to happen. So this is all future data that's setting up in the market. And that's why it's good, ladies and gentlemen, to always check historical data in the market. But let's follow this trend up as it comes back down to this trend line. Let's see what happens in the market. Let's look at when the market started downtrending right over here. Okay? Let's take a look at what happened over here. Okay? 1 area of contact, 2 areas, 3rd area, usually the best buy or sell after the trend already formed. 4th area of contact, we had a breakout in the market. And look how the market came down to basically retest the trend line. And as the market is adjusting, okay, as the market is adjusting, you can adjust your trends and you'll see that the market will start just having things happen. 1, 2, 3. How do you want to look at this? As the 4th hit, and then maybe this is the 5th hit that broke out. So you see, it's all about how you're adjusting your trends. So your trend work will get better. And as your concept continues to expand on support and resistance and all of this, your trading is going to get better. But let's keep looking. Let's keep looking. Next trend, look at how the market starts coming up. 1, 2, starts the uptrend because price finally returns to this area. 3 in the market, right? Price is getting a little sloppy over there, okay? So depending on how you want to draw this up, ladies and gentlemen, okay? Take a look there. 1 area, 2, 3, 4, we had the breakout. Let's look over here. Market's coming down. 2, 3, let's keep bringing this down. What do we see here? 1, 2, 3. Look at how price was coming back. Didn't quite reach it. Coming back, okay, 4, didn't quite make it, but eventually it did come up. But look what happened. 1, let's take a look. 1, 2, 3, nice little sell-off in the market. Now pay attention to what's happening over here. Pay attention. Pay attention, guys. 1, 2, you know price is working its way back down to this trend line. right? So market is clearly in an uptrend where we're buying the market up. Boom, market's buying up. Boom, market is buying up, right? So what do we see over here? Let me come to this little channel. What do we see over here? Boom, we have our little price channel, our counter trend right here. Here goes our counter trend in the market. Okay, here goes our counter trend right here in the market. 1, 2, 3. What is the market doing, guys? It's making its way back down to this trend line. And look at how, when it came back down to this trend line, that third hit right there, that third hit was this hit, 1, 2, 3, where we're expecting the buy. Look at how we're back at the low of the down channel. Look at the down channel right here. Remember, if the market's coming, this uptrend is acting as our support, S-U-P-P-O-R-T. This is acting as our support right here, right? Let's make that smaller. This is acting as our support, okay? Because it's an uptrend. Now, look at the counter trend right here. Okay, the counter trend, when the market is coming down and we're connecting these lower highs in the market, okay, that channel is acting as our resistance, right? This is our resistance because the market is coming down. So we're selling at the high, selling at the high. Counter trend trading, selling at the high. Now, the low of the channel, ladies and gentlemen, is what? The low of the channel is acting as the support, right? Acting as the support. Now, look at how when price makes its way back down here, it hits this channel support at the low, right? It hits the channel support at the low, right? What is the low? The low of the channel is the support. These are areas we're looking to buy in the market, right? So look at how it comes to the channel support, where this is a support acting as an area to buy, and then we're also at this trend support acting as another area to buy. So we have a double area of support right here. That X was a double area of support, and look at the reaction in the market. Big reaction for the market to come up, right? We was also talking about support and resistance. Let's see if this also was acting as an area of support and resistance in the market, ladies and gentlemen. And it absolutely was. Take a look. Take a look at the market. Resistance here, price broke through, price comes back, look at the wick, another support, price comes back to the support. Now we have another support in the market, right? Another support in the market. Guys, we have triple support right here. And what do we talk about? We talked about in our previous videos how support and resistance acts as places to buy and sell. When price is at channels, those are supports acting as places to buy. When it's in a downtrend and it's at the top, these are resistances acting as places to sell. So look at how we had 3 supports. We had the channel support of the low, the support of price, and the next support of the trend. 3 crosses of support right here. We're going to be covering this in a future video called confluence. Okay? Confluence. This is known as a confluence point in the market. Okay, ladies and gentlemen, and we are going to be studying this. Oops. Confluence point. Okay? Confluence point is, okay, how do I explain confluence point? A point of reaction. Let's do like that. Like here we go. A high probability. Oh my goodness, 1 second. Okay. Confluence is a high probability points of reaction in the market. We're gonna talk about this in a future video once we start studying confluence. But look at how the market is reacting, not just to the trend, but to the counter trend, to this support, and we had that nice buy in the market. And then what did we get here as well? We had the 1, 2, 3. Look, this was like the 4th area of contact at the trend where the market broke out. And just look at all these pips you could continue to capture in the market. 200 points to capture in the market, ladies and gentlemen, okay? So let's just keep following and messing around with price, okay? Let's take a look. 3rd point, this is usually the best buy. Market's coming up. Another trend is happening. 1, 2, 3. 1 point, 2nd point of the trend right over here. Let's make this black. I know the market starts to get a little sloppy. Third point on the trend, usually the best buy. Look at all of that reaction up. Fourth point, breakout in the market. Okay? Look, market starts coming down. Market starts turning over. Let's start looking at the market turning over here. Look at the market turning over. 1, 2 major points of contact. Make this a little tighter. And that didn't quite reach it. 1, 2, 3 major points of contact. Market retraces. Fourth point of contact in this area. Market broke above. Okay? And as the market broke out of this trend, look at how it's reacting and breaking above support and resistance. Market breaking above support and resistance. Look at how price, as price broke out, as price came to that first hit, second area, third, fourth point of contact to that trend, price was breaking out. And as price was breaking out in the trend, look at how the market was creating high, low, higher high, breakout, higher low, test of support, higher high, and boom, guys, literally just repeating itself again and again and again in the market, right? Hits this resistance up there, market starts turning around. Let's take a look at our trend again. 1, 2, 3, 4, ladies and gentlemen. Take a look here, okay? Because it continues to happen again and again and again. Look, ladies and gentlemen, look. Trend starts low. 1, 2 points of contact on the trend. 3 points of contact on the trend. Fourth point of contact, we had a break of the trend. And look at how price broke the trend, retested it, and then the market started dropping off. Boom. Market was coming down, and we're going to do it again one more time. 1, 2, 3 points of contact. Third point, usually the best area to buy or sell. 4, we had the breakout. All right, guys, I believe that at this point, you're beginning to understand how these trends are forming. I believe that you're starting to understand how the market is reacting to this data inside the market. The market is simply a composite of data, ladies and gentlemen, all right? That's all it is, and it's constantly following each other. So if you guys can get good and start connecting these points of data, all right, you will get good at trading trends and channels in the market. And believe me, trend trading and trend breaking is a strategy in the market that a lot of traders use, and they're highly profitable at if they master this particular style. The market looks like a mess, but you guys can see how these continuous points of contact were making things happen. So let me come over here. Let's remove all these drawing tools, and let's come over here. And let's just take a look in terms of a clean market. Let's take a look in terms of a clean market. Price is coming up on a trend, making this channel. So as we clearly see, price is coming in an up channel. And what's happening in this up channel? We have counter trends in these up channels, counter trends in these up channels. Look, ladies and gentlemen, counter trends in these up channels, counter trends in these up channels, okay? Counter trends. Look at how the market starts coming down here. Again, okay? Look how the market's coming down here, right? Look, great example of how this is not a perfect channel, but it's okay. Look, guys, counter trends in up channels. This one looks a little sloppy, okay? But you can clearly see that there are counter trends in each of these channels, okay? Look at over here. Take a look over here. Boom. Okay, here goes our next channel right over here in the market. Okay, look at our channels right here in the market. Boom. Uptrend. Okay? Uptrend. And then we have this counter trend. Price breaks this counter trend, and what happens? Market comes up. Market makes another counter trend. Okay, ladies and gentlemen, breaks the counter trend because the market's an actual uptrend. Market comes up. Market makes a counter trend over here, but look what happens. It doesn't break this counter trend. Price fails to make higher highs and higher lows. Why? Look at the rules of contact. 1, 2, forming. 3, usually the best buy. 4, usually the breakout in the market. So you see how here price failed to break that counter trend. You want to put some channels in there? Feel free to put up some channels, ladies and gentlemen. Feel free to have your channels over here. Will they always get channel? Absolutely not. But look at over here. Price failed to break this counter trend. And then price started coming down in the market, right over there. Okay, no counter trend, no channel there, but we had the break and the retest, and price started coming down. Look what happens as I bring this back down. Let's start it at that high point, and then let's come over here. Again, one last time. 1 point of contact, 2 forms the trend, 3 is where we get the best reaction, and then 4 is where we're looking for the breakout in the market. And the market clearly broke the trend, retested, and continued to climb up in the market. Okay, retested on the outside of the trend. Alrighty, ladies and gentlemen. So this is trends and channels in the markets. Alrighty. Now, before we wrap this up, I want to make sure that you guys are taking lots of notes on these trade series that we're going to give you. Okay, but before we wrap this up, I want to give you one last secret tip to the market. Okay, this is going to be a little advanced, but I'm going to show you what's known as positive and negative trends. So just understand that as the market is coming up and we're drawing an uptrend, we're obviously connecting as best as we can in an uptrend. We're obviously connecting the higher lows in the market. That's how we make the uptrend, the higher lows in the market, right? Higher lows in the market. So these are the uptrends. As we do a downtrend, okay, what do we look to connect? Okay, what do we look to connect? We look to connect the lower highs in the market, right? Because the market is making a downtrend, right? This one's a bit sloppy, okay, but we're connecting the lower highs in the market, right? These make the downtrends, these make the uptrends. Now, there's going to be certain times in the market where you're going to be able to come over here and use both sides. You'll be able to use both sides to create a trend line in the market. And I want to find a good example for you. What do I mean here? Let's see if I can find a good example. Okay, here we go. Take a look at this in the market. Okay, you see this over here? Look at how this, right? This is the negative side to the trend. Okay, this is the negative side because it's on the back side of the trend. Okay? Okay, this is the negative side of the trend. Okay, I'm teaching you the secret right now. Okay, this is the negative side to the trend. And then this side, right over here, this is the positive side to the trend. So I'm going to show you. Okay, positive side of trend. This is the positive side of the trend. So you might be asking, hey, well, what do you mean? We're going to come over here and bring the price to a line chart. And you might be able to see these hits just a little bit better. Just a little bit better. Look at how we came over here and the market was making this downtrend right there in the market. Okay, 1, 2. Now you might be saying to yourself, okay, well, when the market starts coming down in the market, right, where is the low of the trend? Where is the channel here in the market? Okay, because look, if you made this your channel, this would have been your channel right over here. That's your channel. But when price broke that channel and kept coming down, there was another trend. There was like this hidden trend in the market right over here. Okay. Oops. Okay. There was like this hidden trend in the market over here because it was happening on a negative side. It was 1, 2 points over here that we were able to drag it out. And if this is the resistance, then this becomes the support. Okay. And look at how we had a reaction right off of this break and retest area in the market of that low. Okay. I want to be able to show you guys, remove on drawing tools. I want to show you guys a better example. Okay, I want to show you guys a better example. Now, using the line chart is an exceptional way to help you guys start drawing up your trends and your channels because it helps the market look nice and clean. 1, 2, 3, 4 break and retest. Okay, the line chart makes the market look a lot cleaner if you ever need help, okay, drawing uptrends and channels. But there are going to be points in the market, right? Let me see here. Let's see if this is going to work out for us. Boom. Here we go. No, we can't use that. I was going to say this is the positive. That's the negative. We can't use that. I want to find a good example. I should have had this ready for you guys. But let me see if I can do better for you guys. 1 second. Let's see if I can find this in the market. Right? Okay, maybe, you know, it's something like this. Here we go. Here we go. This works. This is an unorthodox area to look for a trend. Okay, I'm going to bring this back to price. Now check this out. Okay, come over here. Typically, if you were trading this, in the market, take a look. If you was trading this in the market, you would most likely be following this trend line down over here. Okay, you would be following this trend line down because this is where the area hit. Okay, look, let's get rid of that. This is where the area hit. So we have 1, 2 points, 3 points, right? 4 if you're looking for the breakout, and the market's starting to come up. Okay, so then we have another trend over here. Market's coming up, right? Now look, just think with me for 1 second right here. Okay, there was like an invisible trend. You see how the market's coming back down over here? Now look, the market from here to here, in order for this market to connect, just look, I'm gonna make this blue, okay? Before this market connected, because you actually need 2 points of contact. So you need 1 and you need 2. I'm gonna do a little market replay. Now we didn't know that the market was gonna react at that zone. Okay, so I'm gonna get rid of this for you. Okay, so as you see here, we see that the market's coming up, and then we see here that the market is coming down, right? So here, what I'm gonna do to separate the focus on this is this. So let's say, okay, this is our uptrend right over here in the market. So I'm gonna just put this in a channel line. So that way we're not really focusing on this. I just want this to exist, okay? I just want this to exist right over here, okay? And this is red. Now let's pay attention, okay? We can clearly see that the market is coming up in an uptrend here, and then we clearly see the market is coming in a downtrend here. Now we know, 1, 2, 3, we know that the market just broke out at this 4th point of contact, and we might be expecting the trend to come back down here. Okay, so at some point, this market has to connect over here, right? If it's gonna be a trend and keep coming back up. So a good way to see these hidden points of contact, guys, is by seeing these positive and negative trends. This is a very advanced thing to do in the market. So as you get really good at just doing regular trends and channels, I want you guys to start working on your positive and negative trends. And let's come over here. Let's take this. We're gonna make this black. Okay? And let's look over here in the market. Look it over here in the market. Okay? Look at this. This was the negative side of the trend, right? This black hit was the negative side. Okay? This is not a traditional trend. But look at over here. You see how the market, when the market was actually coming up in that area, look at how it tested the outside. Look at how it tested the outside of that area. Okay, this is the positive side of the trend. This was the positive side of the trend over here. This was the positive side of the trend. And look, we have 1, 2, third area of the positive side. Look at what happens in the market. Look at how the market starts coming up, guys. Look at this, okay? And then look at that trend that was actually created. Now we'll go ahead and make this one, we'll make this trend line blue because this is our uptrend here. Now we have 2 points of contact on this trend. And look at how it created another confluence point in the market. So you see, to the naked eye, the average person would not have seen this because they were following this downtrend over here in the market. But look at how the market made, okay, this negative and then positive side. So we're trying to get 1, 2, 3, good area for the market to buy up, okay? While the market
market is coming down. 1, 2, 3, 4. You're expecting the market to break up. So look at how you have this double confirmation because of this positive negative trend in the market. Like I said, this is advanced, but this understanding will take you to the next level of trading. Okay? Here is the negative side of the trend. Here's the positive side, an unorthodox trend. 1, 2, 3. We're expecting the buy to come up. 1, 2, 3, 4. We're expecting the breakout of this trend. So at the same time where we're expecting this to buy, we're expecting this to break so we can keep buying. So you have a double buy confirmation to pop off in the market. And look at how the market goes up. In addition to that, ladies and gentlemen, put your support in your resistance zones. And look what you have over here. Bingo. Another 1, 2 markets coming up in the market. And it works the same with support and resistance. Negative side, positive side. 1, let's say 2, third area of support, best area to buy, market starts shooting up. So all of this confluence, all of these confirmations, all of this understanding is able to bring us some incredible trend trades in the market. All right, guys? And if you guys get good at this, you guys can start mastering the market. All righty, ladies and gentlemen. So with that being said, we're going to conclude our training on trends and channels today. I hope you guys found some extreme value in.
All righty, ladies and gentlemen, man. So we're going to get ready to wrap up today's class for our trends channels, our counter trends. Ladies and gentlemen, let me know if you guys found some value in that by typing an 888 in the chat box. I know it's still very heavy with all of the traders that are here on the line. So this was a private training, once again, that I did for trends and channels that you guys now have. And we really try to roll out all the stops to help give you guys a very clear understanding of trends in the market with several type of market examples. Because we all know that as you get deeper and deeper into the market, it's very easy to lose your touch to see what trend you're in. You know, everything is mixing up because it's all jumbled together. But once again, as you get better with your trend work, the market is going to become crystal clear for you, because that's what the market is. It's literally just a series of formations, and you just have to learn how to follow those formations. You have to have some type of theory or principle to interact with the formations in the market. And then this would give you, just a really good base to trade off of, and a good base to start developing strategies off of, or following certain educators, right? So I'm very excited that you guys were able to see this. Once again, we're going to get ready to wrap up today's class. Ladies and gentlemen, just do me a massive favor. Make sure you guys come over to your Pip Talk community or download Pip Talk on your mobile app. Because remember, we are going to be leaving our old communication platform. We're going to be jumping into the new one. So remember, I Am Academy on App Store. It's also available on your Google Store. Okay, so just download your I Am Academy, app, whether you're on the mobile phone or whether you're on the computer.